This episode of Analysis in Chains is brought to you by our sponsor, Bankera. Bankera is building a digital bank for the blockchain era, and their token sale is on until the end of February. You can find out more when you visit them at www.bankera.com. And now for our show.
This is the Analysis in Chains with Nathan Williams and Neal Kieran.
Greetings, everybody! Welcome to Analysis in Chains. Hi, Neal. How's it going today?
I'm doing good, Nathan. I lost my shirt last week. How about you?
You know what? I'm not even wearing a shirt. It's been an exciting time, but personally, I'm wishing I would have bought more Ether. I would have waited to buy more Ether now, because I'm very hopeful. I'm always hopeful in the market. So.
Well, the thing for me is that when things are going up, and I'm sure a lot of our listeners notice this, when things were going up very, very quickly, I was getting very, very anxious. But now that things are going down, I'm getting very, very excited because things are getting very, very cheap. A lot of bad crypto is getting flushed out of the market. And when things settle, it's going to be an amazing time to buy. But the issue is, as you just said, you wish you didn't buy any Ether last week, and you wish you could buy Ether this week. And now a lot of people are thinking, I think I'll wait a little bit longer until I buy Ether again. And so I think because everyone's going to be thinking that, I foresee that this sort of bear market that we're in is going to continue for maybe a few more weeks.
Yeah, which is an eternity in crypto time, but I don't... It's 3 weeks of down crypto. Oh no!
Yeah, it's gonna be tough, especially because a lot of people. This is new. I remember the last bad downturn we had was right before SegWit was implemented on Bitcoin, and that took down the whole market. But once the event passed, it really took off. The problem with now is that there is no event to get past. There's just a lot of negative news right now, and it feels like week after week there's something negative, and it's really just pushing in the market. And a lot of people who are not around that long are running away. They're cashing out and just running away from crypto.
Yeah, well, I mean, we just did an episode a couple of weeks ago or was it even just last week that we did that, about all of the factors into the current dip, and now we've got like 3 new factors into the new dip. So
yeah,
it's the attack of the crypto bear.
Yeah, it's like regulation is the flavor of the month, and it keeps coming at us from different directions. So there's 3 main issues this week that's causing some of the downward pressure. One is the Facebook crypto ban. And at first you may think, how could that impact crypto? Well, it really impacts the ICO market, because all of those ICOs out there that were using social media very, very heavily to promote their ICO are going to be effectively losing an arm in the marketing channel. So this could really impact the amount of crypto that would be bought in ICOs in the future. So naturally, that would weigh down heavily on the market. The second issue is the Tether scam. We've known for quite a while that US Tether has been a bit dodgy, because there's no way of proving that any of this US Tether crypto is actually backed by any US dollar. So now that pressure is mounting, there's a lot of lawsuits happening. And even though US Tether still exists in the crypto market, people are anxious and they're worried that this will cause things to tumble even further into the future. And then the third one, which I doubt many people are actually noticing, is that there is a hearing coming up on February 6th with the SEC, where they will be discussing a hearing called Virtual Currencies, the Oversight Role of the U.S. Securities and Exchange Commission and the U.S. Commodity Futures Trading Commission. That's a mouthful, and I imagine that they will be talking a lot about the future of crypto. And the thing is, we don't know what decision will come out of it. Will it be more regulation, or will there just be an acknowledgement of what's happening at the moment?
From my point of view, the speculative nature of crypto is sort of what we're seeing here. Like crypto's value has always been a mix of speculative and intrinsic value. So the intrinsic value is the cryptographic security, the electricity burned for the securing of the uniqueness and the securing of the network of the tokens, and it pales in comparison to the speculative value. So for example, with the first factor that you listed, the Facebook ads, that doesn't really impact Bitcoin directly, but it impacts it secondarily because Bitcoin is one of the main ways people buy into ICOs. And if people are interested in ICOs, then they're going to need to buy Bitcoin or Ether in order to participate. And so if there's less marketing for these Bitcoin applications for these ICOs, then there's going to be less demand for Bitcoin. But I mean, to be fair, there were a lot of scams out there.
Yeah, there was. And I think there was even a Ponzi coin, and a few coins were made just to prove the point that this whole market was overinflated. But the thing is that it's no different to any other technology revolution that we've seen in the history of mankind. You know, be it the railway systems of America, the dot-com bubble. It's always the case because people do realize there's a lot of opportunity with blockchain. But you know, even if you go through crypto or the actual stock market, it is always going to be very hard to measure these things and determine where is the real value. Even if you think of Facebook, I remember when it went on the Nasdaq stock market for the first time, people were saying, how can this make money? Because all you have is people talking online. Well, where's the value in that? And over time, people realize, oh, actually, it's all about sponsorship. And that's where a lot of money started to come in. And I think that with crypto, the real profit-making opportunity is yet to be determined, but people just know it's the new thing. People like this. People are drawn to it. People want crypto to be a part of their lives and to have various trading platforms in order to get things at prices that they feel are a lot more representative of the value of the good that they're trying to acquire. So there is a future for this, but as you said, it's so hard to really put your finger on how much is this really worth.
Well, we may have to endure a long, hard crypto winter. It could last 3, even 4 weeks.
Yeah, yeah. Well,
how many times can we make that joke in one podcast?
I don't know. But the thing is that I kind of ask myself, in terms of crypto winters, you know, how long can it really go on for? And you know, the optimist in me is thinking 3-4 weeks, but then the pessimist in me is thinking that I'm kind of thinking more of the Gartner hype cycle. And I made this point in our earlier podcast about where blockchain is. And in the Gartner hype cycle, I really did feel that it was at the peak hype. And when you have peak hype, it plummets down to a period where everyone has lost complete hope in this technology. That everyone just thinks there's no hope for it in the future. And I think one simple example is when we think of Pokemon Go and augmented reality, when everyone was out there playing Pokemon Go and augmented reality was the future. And yet we've kind of gone through this dry period where there's not many applications out there like Pokemon Go. And like, okay, what happened to this technology? Why is it not so popular? And I feel that we just experienced the Pokemon Go period of crypto in December. It was just crazy fever for crypto. I was getting text messages every day. And the thing is about these technologies, when they plummet down to the period of despair before they plateau into the period of enlightenment and maturity, is that it can take, you know, up to a year or two. And so that's what I'm kind of worried about. The pessimist in me is worried that it will take longer than 3-4 weeks that we've seen in crypto world. And this could go on for a year or two. But the thing is, crypto world is very, very healthy. The infrastructure is incredible. The communities are so strong. But in terms of pricing, this bear market, I fear, could go on for quite a while.
One of the things that this sparks in me is sort of the realization of the similarities. Sorry, I'm in two places right now because this is really something I've thought a lot about. Is augmented reality. I was big into Pokemon Go when it came out. I was just as disappointed when it sort of flopped because they couldn't keep. And then, and I've thought about why, with all the hype over augmented reality, did it not take off? And it's interesting, thinking on the fly now, like, are there similarities of the crypto world, or is it in a different space? And from my point of view, one of the reasons augmented reality had trouble taking off, and I think it still can, but it hasn't yet, is because of severe technological limitations for its adoption. What do you need to have augmented reality? Well, you have a device and you have to hold it up. You got to hold up your phone in an awkward position. Like most, it's, if you're looking out and holding a phone, where do you hold it? Around your waist level, maybe a little higher, 20 degrees below your field of vision. Where do you have to hold it if you're walking around and doing Pokemon Go? Up at your eye level. Pokemon Go managed to avoid it because it was only certain times you had augmented reality. So it was like a little piece, but it's uncomfortable to do that. And so like you try the Google glasses, but they look weird and they don't hold a charge. And like there are real technological limitations to using this. Now, the thing is there the same parallel with blockchain technologies, cryptocurrencies? The answer is maybe. And when you're dealing with cryptocurrencies, I mean, you do have limitations in transactions per second, in transparency because it's also new, in linking chain transactions to off-chain events, and those are things that people are actively working to try and solve. And the question is, are those a severe limitation to crypto's wider adoption or not? Is it right now just hype or not? I think for a lot of applications, crypto is much further along than augmented reality is, because the solution to those augmented reality problems is not right now obvious. Whereas with crypto, there are already functioning market-ready applications, including stores of value, cross-border payments, reward systems, loyalty points, co-investing, all sorts of different things that are actually working out there, and the challenges are regulatory. So I have a little more hope, but it still remains to be seen, because even with some of the biggest projects, you end up having them be more smoke and mirrors than tangible project platform that works. So we'll see.
Yeah, I totally agree. And I think that what we saw in recent times, the issues with scalability, and the more popular a blockchain became, the more fees were increasing, the longer it took to confirm transactions. So yeah, if they get over these barriers, maybe things will move on much quicker into the future.
We don't have to talk about absolutely everything that's playing into this downplay, but I think it is valuable just to mention exactly what's going on with Tether, because a lot of people I've talked to haven't really, they've heard there's a scandal, but they're not really sure what's up. And the way I understand it, you can correct me if I'm wrong, Neal, but the way I understand it is that Tether and I think it's Bittrex, is it, are owned by the same group of people. And what was happening was every time the Bitcoin price was dipping, magically 100 million, 200 million Tether were created out of nowhere. And the whole point of Tether is that it was linked to the US dollar. If they received $1, ostensibly only one Tether was created, and that US dollar would be held in a vault in a bank account. So you would know that one Tether equals $1, and you could swap back and forth between Bitcoin on the exchange without having to take your money off of Bitcoin if you wanted to put it back into fiat currency. So it sounds like a good thing, but one of the things they missed was they said promised they were going to have audit reports regularly, so they would demonstrate that they actually had these US dollars, and they never did. And then whenever the Bitcoin price dipped, another 100 million Tether were created, and they could buy up the Bitcoin. So they would buy up this lower Bitcoin with the Tether, and that propped the price of Bitcoin back up. It also was, enriched the people that made the Tether, and so they've been subpoenaed now over securities fraud, and we don't know the outcome of the investigation that's going to happen, but it sure looks suspicious, like they were printing their own money to buy everyone's Bitcoin when it was going low, and then artificially propping up the price of Bitcoin in the process.
Yeah, and in terms of actual market value of how much they printed, it's roughly $2 billion. And on one hand, people were saying when the total crypto market was worth $800 billion, it's like, yeah, so what? It's only $2 billion. But
I'll just print up $2 billion and tell everyone that it's worth more than it is.
But the thing was that they were actually printing this during periods, down periods, and then creating the hype upwards. So while it was only $2 billion, they were actually, I guess, creating 10 times more crypto hype because of it. And so when you take away this lever, it means that it will not exist in the future. It will not be this lever that will just cause Bitcoin to jump up out of the blue and everyone gets very excited again and think, hey, this is it, it's gone by, and Bitcoin's going to go to the moon again. So you're actually taking away a lever that could cause some hype. And I think that's why it's weighing heavily in the market. And just to correct what we said, it's actually Bitfinex is the guy who's working with.
Oh,
yeah. Sorry, Nathan. You asked me to check, and I accidentally said yes. It was Bittrex. No, it's
Bitfinex.
Yeah.
Yes,
Sorry, Bitfinex.
Bittrex is the good one. Yeah. No, or well, we don't know if it's good or bad, but it's not under investigation. Bitfinex.
Bitfinex. Yeah. So just in case a lawsuit was coming our way, I just thought I would highlight exactly which exchange it was.
Welcome to Analysis in Chains, where we are totally accurate with everything. Yeah. Please do not sue us. So, okay. Well, anyway, that's the nitty gritty of it. So, hopefully, the crypto market will recover from this. Anyway, I've got to wrap up pretty soon, Neil. I'm about to take a big trip.
Oh, really? Where are you off to?
I am heading off to Cape Town, South Africa. There is a conference there called Mining Indaba. It is the world's largest mining conference, and I am going there with my startup, Minespider.
Fantastic.
So, yeah, no, things are really heating up with Minespider. So essentially, what we are doing is we are creating a platform for tracking conflict-free minerals using blockchain. And I am going down there to meet mining companies and to get our strategic investors and to tell. I'm pitching at a startup event as part of Mining Indaba. I'm going to be asking them to invest in our pre-ICO and getting early pilot projects. It's really taking off. We've added a bunch of new people to the team. We've got a couple of people that are helping and redoing our website, so there's actually, it looks like a real website and not a WordPress thing I put up. So it's really starting to look like a real company.
So what's the bigger picture with Minespider in terms of what are you trying to implement?
Essentially, we're trying to solve a problem, Neil. The problem is that minerals, like metals that go into your smartphone or your jewelry, they're not uniquely identifiable. They're commodities. They can be mixed together with materials from different sources. And as such, they're very difficult to track. Like if you have a diamond or a chair or something that's uniquely identifiable, you stick a tag on it and you can maybe track it using a database or a blockchain system. But with minerals, it's harder. So what we're looking at is treating minerals the same as you would green energy on the electrical grid. So if you buy green energy tomorrow, it'll still come to your house mixed with coal and nuclear power. But you know the money that you paid goes back to the green energy company, because for every kilowatt hour you purchase, a kilowatt hour has been made at the responsible source. And so similarly, we want to do this with metals. They come from mines, and as much as created at the responsible source, you can purchase and trace your money using this system back to the responsible mines. Because essentially what we're saying is that with conflict minerals, they're metals that fund slavery and child labor and armed groups in, areas like the Congo. And, the 5 million people have died since the Congo War began. And, no one wants to fund that. So, but it's not that the metals from the armed groups' mines are somehow corrupted. It's that the money that was paid for them is funding the civil war and funding these atrocities. And so this is why we're saying, okay, well, if we follow the money, if we do this sort of commodity mass balance approach, then it stands a real chance of making a difference.
That's awesome. And it's projects like these are the reason why I like crypto and the blockchain and stuff like that. I do feel that there are too many projects out there just trying to cash in instead of actually trying to make an impact on society. And, for me, I love to hear about these type of projects. And I'm sure our listeners cannot wait to hear more about Minespider in the future. And I hope South Africa goes well. I hope it's a big success. I hope you fly out there as the most popular celebrity in South Africa in this millennium. And hope it goes well.
Yeah, thank you very much, Neil. I really hope so too. I'll be back. I'll be back in a week, and in the meantime, we've got a couple of interviews, and we should be back in time to do next Monday's episode. I guess I should mention a couple of other events coming up, some other news, very quickly. First of all, Crypto Assets Conference that I'm going to be speaking at the end of February. It's looking more and more interesting. They've added a number of high quality speakers, and I wanted to remind myself who they are. But if you look under the crypto-assets-conference.de, you'll see that they've gotten a lot of crypto people coming down there. So I'm excited to be there, and I hope everyone comes and sees me and hangs out and thinks I'm cool. In addition, our live meetup, Blockchain Unpacked meetup, will be in Berlin, February 15th. Check it out on the meetup group. But more than that, we're doing one in London, Neil.
What?
We've got an event space. We've got a guy that's one of our listeners who has helped us to organize an event space, and we're going to do it on the 19th of February, and I'm going to be at that too. So I'll keep you updated as soon as I have details and put up the meetup group so that you can visit us. In addition, we're starting one in San Francisco. We've got speakers lined up. We are still looking for a space. If anyone has a space in San Francisco and wants to have us, our Blockchain Unpacked San Francisco meetup, meet there, then message us, info@analysisandchains.com, or join us on Slack and chat with us there. So thank you to Frank and to Ed for organizing those satellite meetups. And it's exciting times for the community. Anything else, Neil?
No, that's it. I'm just gonna go get a coffee and get ready to watch the crypto prices collapse.
Oh, everyone, don't give up hope. Don't jump off that building. Keep on hodling. Life will begin again. It will be fine. And even if we have to endure a long crypto bear market of 3 to 4 weeks. Till next time, keep on hashing.